Clay, thank you for joining us.
You're welcome.
It's been a long time, actually, almost 3 years. In fact, a tick over 3 years since we've done this.
Yeah.
A lot to talk about today. We're talking mainly about the Asian markets and the Chinese markets, which have been a tough place to be, courtesy of the Ukraine war, which has fed into energy prices, which is like a tax increase to the Asian countries, high American dollar, and then also Chinese COVID zero policy, in addition to a troubled property market there. So that's the history. Let's look forward, and we're shooting this on a day where it's just been announced in China that there's been demonstrations, large demonstrations to the Chinese COVID zero policy. So let's start there. How do you see this playing out in terms of the COVID zero policy in China?
Sure. So our base case was always that zero COVID as a policy is untenable long term. So we thought the way it would play out in China eventually would be the way it's played out in pretty much every other country in the West, which is a revaccination wave followed by a staggered opening up. And the latest protests and civil unrest is just another reminder of that unsustainable nature of this policy. Now, interestingly, post the 20th Party Congress, we saw more, I think, concrete evidence that the government is preparing to move away from that zero COVID policy. So we saw the new 20 measures to deal with COVID announced. Interestingly, the CEO of BioNTech, the producer of the mRNA vaccine, accompanied the German Chancellor to kind of that diplomatic mission in November in China. And the mRNA vaccine was actually discussed, and also discussed in the Chinese media, which is a bit of a new development. And then we've also seen reductions in quarantine time lengths. We've seen changes to what counts as a close contact. And finally, Xi is travelling internationally again, which again sets a signal. So from that perspective, we think the train has left the station. The ultimate question is just the timing of when we get there. And the gating factor to that is simply the over 60-year-old population in China needs to be revaccinated. And the government's been fairly clear that they don't want to make that vaccination push until they have a vaccine that they deem to be effective enough. Now, the latest round of protests is a new development, right? So again, that means that time is not on your side. Probably, the negative base case would be they've gone this far, they've got a timeline they're working to, and they will probably lock down and try and suppress this, albeit it's unpredictable. It could develop in a way that it brings forward the timeline. We can't know. But I think the key message is, I think the policy direction has been set, and that's important from an investing perspective.
And the other issue going on at the same time in China has been in the property markets, and one of the moves from the Chinese government to make sure property is affordable there, which is a good measure, has come with some problems, particularly in the property development market. But that said, there's been a number of things that the government has done in the last 6 months. So are you able to just give us a brief overview of what's been going on in that sector, and why it's important for investors?
Yes. Well, it's important for investors just because it's a large slice of the economy. So, residential property is a big market pretty much for every economy in the globe, and when that's doing poorly, it's a problem, and that's very much true for China as well. When we last spoke on the Chinese property market, I think we highlighted two areas, or two problem areas. So the first was just access to funding by the developers to complete properties. And the second problem area is that you've seen a loss of confidence in the Chinese consumer to want to buy a property. They're seeing prices going down and they're saying, great, we're going to sit on our hands and wait. And you need to regender that confidence. We think funding is an easier problem to solve, confidence is harder. But in recent times, we've actually seen probably the most substantive measures to date to try and address both of those issues. So on funding, we've seen three changes. So the first is essentially the banking system has been directed saying you can now lend to the property developers to complete projects, and the central government will guarantee those loans. So if there's any NPLs that develop on those loans, they will be essentially taken care of, guaranteed.
NPLs is non-performing loans.
Non-performing loans,
Yep.
yes. So you will not take loss on those loans that you extend. So that's a big tick to getting funding flowing.
Yeah, and it's also a big tick because it's coming from the central government, is it not?
Rather than the local government.
Yeah.
The second aspect is the big 6 Chinese banks. So this is China Construction Bank, China Communications Banks. So these are big 6 SOE banks. They've also been directed to lend to almost like an approved list of developers, or developers that are seen as systemically important, if we use an old GFC term.
Yep.
And that is happening as well. So you've seen these very large lines of credit being provided to China Vanke, Country Garden and the like. So that's another indication that the money is now flowing. And then finally, the central bank themselves has said we have a 250 billion RMB kitty that we will use to purchase and support the domestic bonds of those property developers. Again, the financing is there, guys, if you need it. So that's a big tick on the funding.
The funding aspect, yeah.
Now, confidence, harder, but we've also seen some big changes there. So probably the most substantive change is the local governments have been given far more freedom to stimulate their own domestic property markets in their, call it provinces. So they have been allowed to change the down payment requirements to get a mortgage. They've been able to lower the interest rate on mortgages. They can remove some of the restrictions around buying a second home or an investment property, which is still very tight in China. So in the past, those measures have been tremendously successful. We will see. The complicating factor is again zero COVID. It's hard to get the property market really going when you still have that over your head.
It's difficult to move when you're in lockdown, isn't
exactly.
it?
It's not top of your mind when maybe you're worried about your job security. However, similar to zero COVID, the train is in motion. You can see the direction of the policy, and I believe that if you do not get the response that's required, more measures will come from here. So again, I think that's a incremental positive, and this is by far the biggest action they've taken to date.
I think in Platinum's quarterly review recently, you were talking about timeframes in terms of the next 12 months. And given this is a moving target and a very fluid situation, firstly, did I read that correctly? And are you still of the view that COVID zero and the property market starts to play out in that sort of timeframe?
We think so, yes. Coming back to that problem of the gating factor of the vaccine, we know that there's 16 trials underway. The key bit of efficacy we need is just that hospitalisation rate. If we can get positive data around, preventing hospitalisation and death, I think that's what you need, and that gives you the leeway. But yes, over the next 12 to 18 months, I think it's highly likely that you see more positive moves along those two measures.
And it was interesting just watching the Chinese markets, which have been up 25% in the month of November alone, just on the hint of loosening of COVID zero policy. So when this train does leave the station, it'll move fast.
Yes.
It's the other thing that's changed in recent times is just the language around. So Xi's travelling, and there seems to be a softening of the language as well at recent meetings with Biden and also Albanese. So are you seeing a change in that respect, a softening?
Yes. So. I always break it down between there's words and then there's action. So we've seen a number of face-to-face meetings that we really haven't had for 2.5 years, because Xi's back on the road and active internationally now. And I think both from the official statements by the government participants themselves and the media reviews that, look, those discussions were positive, constructive. And I think, one, it's a positive that talks are happening again. And then the second, I think you get the sense of they're trying to put a pause on this escalation. So I think that's a large positive. I don't believe the Chinese government would be under any illusions that the relationship between them and the US is about to heal. However, I think it is clear they want to re-establish or mend the relationship with the Europeans and probably everyone else, and that would include Australia. So that's the words, but I would also kind of point you to the actions. And I think the interesting aspect is we've got this evolving US-China tech or strategic competition war that's happening. And the US government has consistently, I guess, escalated. So we had firstly the chip ban on Huawei, and now we've moved to a chip, basically a ban on all leading edge semiconductors, both the chips and the production equipment. In response, the government has effectively done nothing. They have not retaliated, and they have a lot of political cover to retaliate. Yeah. And I think the absence of that retaliation tells you that they believe it is not in their interest to do so at this moment. They still rely on foreign technology. They want to obtain greater self-sufficiency, and an act of retaliation which could potentially cut more of that technology off is not in their interest. So they're kind of taking this very high moral ground. And I think that's interesting because it, one, leads to, I think, their position in some of these discussions. But I think it's also an interesting thought process to go down with the Taiwan issue. So that's very front of mind for people. If they're not willing to take what would be a minor retaliation, would they really be willing to take what would be an incredibly major move and in a short time frame? So I think that's, again, an interesting way to think about.
It is interesting to take that to the Taiwan situation. Yeah. Also reading from your most recent quarterly report on that, I think I remember reading that there was research done on how many people, if in Australia, think China is going to invade Taiwan versus how many people in Taiwan think China is going to invade Taiwan. And the numbers were, I think, something like 1 in 4 Australians believe China will invade Taiwan, whereas less than 5% of Taiwanese think China is going to invade Taiwan, which just supports what you're saying.
Yeah, I think, look, it's the classic, the invasion in Ukraine brought the spotlight back onto the Taiwanese issue, which has been an issue for over 50 years. So we understand the concern. The question is always a matter of timing. So if there's a concern around, let's say, a non-peaceful reunification, even that is an oxymoron in itself, the next question is, over what time frame are we talking about? We can discuss, is that in China's actual interest at the moment? And also we would place a lot of weight on, I guess, the view of the CIA themselves, which was remarkably accurate in predicting Russia's actions. And when asked point blank of whether they believe there will be any action taken over the next 2 years, the answer is an emphatic no. But look, it's something that you can never quite take off the table, but it is one that is garnering a huge amount of focus, and probably the investment community is probably overweighting the probability of a near-term action versus reality.
So there have been changes in the Asian and Chinese situation in very recent times. So if we were to finish off on what are your reasons that you're optimistic about your investments in the Asian region and including China?
Yes. I would answer it in 2 ways. We can think long term and then short term. So we'll start with the long term. And if you were just to summarise it simply, it's just within China there is still enormous scope for that country to improve its standard of living. And history tells you that where a country is moving up the technology curve, that results in higher wages and higher productivity, it creates a huge amount of opportunity in that domestic stock market. And whether you like the Chinese economic system or not, and we can debate that, it's clear that their economic system is actually achieving that goal, whereas the systems of so many other emerging markets failed. So that is happening, and it's not clear to us that that economic model is being abandoned as we speak or anytime soon. So that's the long-term opportunity, and interestingly, from an investment perspective, that opportunity is not in focus. We're focused on other negatives at the moment, whereas you look at a country like India, where that same opportunity is very much in focus and people are enthusiastic about it. So that would be the long-term case for China. But then we have to look at the short term. And when we're talking about geopolitical issues like the change in US-China relationship, like Taiwan over some sort of time frame, these are issues that are very hard to put some sort of dollar aspect on. There is a binary element to it. So I understand investors' angst, and we think a lot about these issues as well, and there has been a change there. However, if we've thought about the shorter term reason for to be optimistic, interestingly, I think the most common question I get today is, why shouldn't I sell all of my Chinese stocks?
Yeah.
And I would think about it this way. The Chinese market, so the Hang Seng China Enterprises Index, which is the big mainland, the important mainland companies listed in the Hong Kong Stock Exchange, that market fell 60% from its peak to trough. 60% is an extreme move.
Yes, it is.
And if you think about the base case, so we know that basically for a market to fall 60%, there always has to be a new problem we have not faced before. So we can think about the GFC, the market was down 50%. We had fears around the collapse of the Western banking system, right? It was a new problem, but it was actually a generational buying opportunity. So the base case is for a market to be down 50%, and if its economic system is intact and is still working, the base case for buying at that time is actually very, very favourable. The base case to sell out is very poor. Yeah. And I think that's where we come to saying, well, look, the market has taken this extremely negative view of China and the view of the government and a view on what policies may come out of that government. So they've taken that negative view, and that's been imputed in stock prices. However, we will now test that negative view or calibrate that negative view by actual actions over the next 12 to 18 months. Sure. And our viewpoint, there's actually a very high likelihood that policies from here may be quite favourable to markets. For example, more clarity on a plan to shift away from zero COVID. And then once that happens, the domestic economy can put in a very big rebound. I mean, it could rebound strongly without even any domestic stimulus. Yes. And those two aspects would be taken very favourably by stocks. And as you mentioned, in recent times, stocks are up 25% on the mere hint of opening. So our viewpoint would be, we understand these changes, but that may mean that you may want to reassess your view on Chinese stocks with the market down 30%. But the mere act of going down 60 to down 30 is a huge positive move in stock prices. So from a sentiment perspective and from the extremity of the price falls, we would actually say the opportunity to make money in China is actually, the risk reward is quite in your favour in the near term.
It's a very different perspective from what many will read. Simplistically, it's buying straw hats in winter, isn't it, really? But Clay, that's excellent. This is a very fluid situation. Very much appreciate your insights as always. So it's great to see you again face to face.
Thank you very much, and you're welcome, Mark.